Because there's four.
There's four, right?
So the first two, name it off first.
Disregarded entity.
Disregarded entity.
Also known as sole proprietorship, right?
Okay.
Number two, partnership. You don't have to make an election if there's one or more people are gathered together.
Yeah.
it's a partnership, and then you've got to file a 1065, and if you don't, you get penalized for not filing that, right? But that in most cases, as active entrepreneurs, you're going to be taxed on all of that income, partnership income. Self-employment tax will be subject to self-employment tax. So then there's the other election. There's the S corporation and a C corporation. Okay, most small businesses are probably going to go towards the S corp, but there is a very, very lucrative reason to maybe file as an C corp. And we can get into that in future episodes.
Very interesting.
Yeah, we can get into future episodes about that, but I kind of want to table that. But I just want to say there is a real reason that some people do organize as a C corporation. But for most people starting out, they're going to default towards wanting to pay less in self-employment tax and organize themselves as an S corp. From you can organize yourself as an S corp as a sole proprietor. So you can go from sole proprietorship into an S corp, and you can go from a partnership into an S corp. Okay, and you could also do that.
Once you're an S corp,
you have to basically revoke.
Go back.
No, you can't.
No turning back now.
Yeah, you can, but it's a pain. I wouldn't recommend it. I've never seen someone do that. I've seen people go from C corps to S corps. Right. And I think there's been situations where I think especially in 2012, a lot of S corps went to C corps because the corporate tax rate went down so much. So there was some conversions there.
What does it stand for? Tell everybody what it stands for. C corp and S corp.
Subchapter S is the S corp. And and then C corporation, honestly, I don't have the answer for that.
I don't think anybody knows. Nobody knows.
There an answer.
I'll be honest with you, Devin. Most of the things that you're telling, it's like it's like you're speaking Spanish to me.
Right. I'm trying to. But no, I wish I knew the answer. The answer should be, ChatGPT. I'm sure knows, but
sure.
But I believe the S in the S corp goes to subchapter S of the tax code. That kind of breaks out what an S corp can be. And if I'm wrong, I really apologize on that. But let's talk about the S corp.
Yeah, you're right. Subchapter the name C corp is the name comes from a subchapter C.
Okay, there you go.
So you have a
subchapter S.
Thanks,
subchapter S and subchapter C.
I appreciate it, man.
So
Yep,
there you go.
All right, fantastic. The concept of an S corp though is this, right? When you invest in, let's say you invest in Coca-Cola, right? That's a C corporation, I believe. Yeah. Publicly traded, right?
Right.
You're not active in that. You're not bottling any Coca-Cola for them. If you did and they paid you, you'd be
just an investor.
Yeah, you're just an investor. So you've given them money, right? And then their employees, you're not the employee, but their employees have bottled the soda and then they've sold it. They've distributed it and they sold it and they've made a profit. And then you get paid a dividend, right? Or let's say they give you a dividend or your stock price goes up because they've kept it in the system, right? Kept it in their company. And so it's worth more because they've kept the profits. And so when you sell that stock or you get a dividend, you are not subject to self-employment tax on that because you're not employed by them and you're not doing any work for them, non-employee compensation for them, right? You invested. Similar to you put money in the bank and you get interest. They haven't been paying a lot, but you get interest on a CD.
Made $2 last year off of my checking account.
Exactly.
So
that $2 is what the IRS considers unearned income. Now that seems like a loaded term. I mean, I feel like if you saved it and you earned it. No, but from the term for the IRS, what they look at that is they call that unearned income, and when it's unearned income, it's not subject to self-employment tax. A really important distinction.
Unless you cash it out of, like your let's say your Coca-Cola stock.
Yeah,
you reinvest the dividends. If not, when you take them out, you're subject to taxation.
No, you're subject to income tax.
Income tax.
You're not subject to self-employment.
Self-employment. Yeah.
Right.
Yeah.
So when you have that, when you understand that concept, the S corp starts to make a little bit more sense because when you have an S corp, let's say you have other employees, other people are working, right? There is going to be a part of your investment into that company that is going to have a return similar to your investment in a publicly traded company,
Right.
right? That is not by your hand. That is not because you earned it by working as an employee. Now, you are still an employee of the S corp, but a portion and a portion of that profit is going to be subject to payroll tax.
So at the end of the year, after, let's say, you've worked, let's say your company makes $1 million gross a year, right? You've invested a lot of money into that.
Exactly.
These guys are earning you money at the end of the year once taxes are paid, and there's a surplus left over. That's when you would divide out. That's non-taxable income.
That's not
income. No income.
It's
no
income.
self-employment tax.
It's still income taxable,
but it's no self-employment tax on that. So instead of paying the 35%, you're going to be taxed on the 24%.
Exactly.
Right.
Exactly.
Okay.
So it's just the 25%.
Gosh. I've been trying to get to the bottom of this for like 5 years with you, Devin, and now you're finally starting to make sense to me, man.
Right. When you understand the basic concept of the payroll tax versus the which is, again, payroll tax and self-employment tax are pretty much the same thing, right?
Yeah.
When you get that and understand the distinction between that and the income tax, then the S corp all of a sudden starts to make more sense because what the IRS wants to see if you're working for the S corp, right? They want to make sure that you take a reasonable salary, which would be like, let's say, you invest in this S corp and you're an officer. They'd want to see you get an officer's salary for that size of a company, whether that be $100,000. Like, a lot of CFOs probably can get paid around, for a small business, get paid around $100,000. So if you pay yourself $100,000 and you make $1 million let's say the income from the S corp after you've paid yourself and all of your employees is $1 million, only that $100,000 you paid yourself as a W-2 employee is subject to the payroll tax. And then the $1 million that flows through to you is going to be subject to income tax, but not subject to self-employment tax because of the concept of, hey, part of you is an employee, yes, but part of you is an investor, right? And that part should not be subject to self-employment tax because that part should be considered unearned income.
An investor where all your money's going, an employee where I'm getting nothing in return, to be honest. Like when you're first starting out, like you're paying the business so you can work in it for free.
Right.
Yep. Let me ask you this. You talked about reasonable salary. The concept of a reasonable salary confuses almost every business owner. Like how should entrepreneurs think about a reasonable salary, especially starting out?
Yeah, so that's a very gray area. Now you can hire firms, they'll give you like, here's what a reasonable salary be for, in your area. You can get really granular, right? But if you're not making money, like the first couple of years you're doing a startup business, I have not generally seen, the tax law says you got to pay yourself a reasonable salary. I have not seen the IRS aggressively pursue S corps that are losing money those first few years that are not paying a salary to the owner. Okay. I believe the law allows them to, and allows them to force any S corp to pay a reasonable. So if they come in, they say, hey, listen, you've been putting 40 hours a week into this business. You need to pay yourself at least, let's say $20 an hour. And now that's subject to self-employment. You could really, that means you're paying taxes on money on a losing position. Again, I think they understand that, and that's what they're not going to go after. So if you make like $100 at the end of the day and you don't pay yourself a salary, you're probably not going to be audited. You're probably not going to get slapped on the wrist. And there's a famous case where an accountant created an S corp for himself and paid himself a zero salary and took it to court and lost real bad. So not every
Could it be labeled as a hobby after a certain amount of time?
Hobby is subject to self-employment tax.
Really?
Yeah. So,
they're coming to get you. They're coming to get you.
The hobby is bad for you in the sense that you can't write off your losses, right? So